The Subcommittee on Housing and Insurance will come to order. Without objection, the Chair is authorized to declare a recess of the committee at any time. This hearing is entitled Housing Affordability, Government Barriers, and Market-Based Solutions. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the Chair for inclusion in the record. I now recognize myself for 5 minutes to give an opening statement. Today, the subcommittee will hold a hearing to discuss the lack of affordable housing in many communities across the country. In particular, we will examine governmental barriers as well as market-based solutions to bring down the cost of housing. Americans spend more on housing than any other household expense, representing 33% of a family's budget. Historically. Families in many areas of the country would love to get back to that level. The rise in both home prices and rents has far exceeded the rate of wage growth. So in Cincinnati, Ohio, a city once considered affordable, the median home price is now $270,000, which is approaching 4 times the annual median household income. Such unaffordability is spreading far beyond parts of the country known for their high cost of living, like New York, San Francisco, Washington, D.C. Nationwide, median home prices are now nearly 6 times the median household income, where historically the advice was stay 3 times. So this is maybe one of the most emblematic markers on the lack of affordable housing. So that's why the committee has held multiple affordability hearings last spring on President Biden's misguided policy of increasing mortgage costs on credit-worthy borrowers. That idea was an insult to affordability. The House responded by passing our Middle Class Borrower Protection Act to eliminate harmful costs, though the Senate has so far failed to act. The rental market is facing similar challenges. Renters are now more cost burdened than they've been in over 2 decades. While rents have gone up in some areas by double-digit growth, median income for renter households actually went down between 2019 and 2021. For many, housing is becoming unattainable across the country. 1 in 3 young adults, age 18 to 34, still live with parents. This impacts their ability to start a family, build wealth, and contribute more intentionally to the national economy. Seniors, too, with fixed incomes and the burden of increasing health care costs, are even more cost burdened than ever when it comes to housing. In rural areas where land is abundant, price pressures still exist, such as cost increases to rent and build manufactured or modular homes. As we confront these affordability challenges, what seems to get left out of the conversation is that all of the expansive efforts of government have not solved this problem. In fact, they've added to it. The solutions we need are market-based solutions where we remove government barriers to construction of housing and encourage greater private sector investment in housing. Of course, many of my colleagues on the other side of the aisle in particular will likely see things differently and suggest that we have more government, more rules, and more spending. Maybe that's their measure of success. I hope we focus on affordability. These solutions have been pushed for years, and interesting, they are the same affordability crisis they decry continues to get worse. So not only have those policies failed, but it seems the Biden administration wants to avoid congressional accountability for the failure of their policies and oversight. Case in point, for almost a year now, the committee has requested that the Housing and Urban Development Secretary, Marcia Fudge, appear to discuss the Biden administration's housing affordability plan. In fact, since May, the committee has offered at least every month that the secretary make an appearance here, only to have her repeatedly decline to testify or outright refuse to respond to numerous requests. Silence is a poor response to a crisis. The American people deserve greater transparency in how their government operates, especially when it has to do with their ability to afford housing. Ensuring accountability is one of the fundamental purposes of this committee, and I hope that the Secretary will finally agree to appear before our committee next year. In the meantime, even without the administration's input, the committee will continue to explore how government policies are contributing to to the high cost of housing and what private sector efforts can do to address the critical issue for those most in need. I yield the balance of my time, and I now recognize the ranking member for this hearing, Ms. Presley from Massachusetts, for 4 minutes for an opening statement.
Thank you. It shouldn't be news to anyone that we are in a housing crisis. Demand for housing is far outpacing supply. As a result, millions of Americans in urban, suburban, and rural neighborhoods are finding shelter to be increasingly unaffordable. Prospective home buyers are facing record high home prices, and millions of renter households are cost burdened, spending elevated amounts of income on housing. Several factors influence the supply of affordable housing. Democrat and Republicans agree about the need to address state and local barriers to increasing home construction, but that is not enough. The Joint Center for Housing Studies at Harvard University testified before Congress that even if measures such as zoning reform and land use policies are adopted, they will not be sufficient to bring down the cost of housing levels to within reach of the lowest income Americans. Central to the question of how to address the affordable housing crisis is answering the question, affordable to whom? And to close the affordable housing gap for lower income households, there needs to be assistance for both development and rental income over time. To put this clearly, expanded public subsidies will be needed to increase and preserve access to affordable housing for millions of Americans. I believe housing is infrastructure. We must adequately support and fund federal programs that have been successful in expanding affordable housing access. It's vital to continue to strengthen and improve others. This includes federally subsidized housing. I also hear from my constituents in the Massachusetts 7th. Across Massachusetts, a quarter of all residents spend half their income or more on housing. Boston is now the second most expensive city in the country to rent in, where the median rent for a one-bedroom apartment is just over $3,000. $3,000. In East Boston, between 2011 and 2021, Warren Group data show the cost of a single-family home shot up 226%, the sharpest hike of any Boston neighborhood. So I hope that today we can have an honest conversation about the affordable housing crisis and the extent to which public-private and public-private solutions are adequate to address these challenges. And I look forward to hearing from our witnesses today. I yield the balance of my time.
Thank you. Today we welcome the testimony of Seth Appleton. Mr. Appleton is the president of the U.S. Mortgage Insurers. Dr. Emily Hamilton. Dr. Hamilton is the senior research fellow and director of the Urbanity project at the Mercatus Center. Norbert Michel. Mr. Michel is the vice president and director of the Center for Monetary and Financial Alternatives at the CATO Institute. Arianna Royster. Ms. Royster is the president of the Borger Residential. She is here on behalf of the National Apartment Association. And Diane Yentl. Ms. Yentl is the president and CEO of the National Low Income Housing Coalition. We thank you for taking time to be here. Without objection, your written statements will be made part of the record. Mr. Appleton, you are now recognized for 5 minutes to give your oral remarks.
Thank you. Chairman Davidson, Ranking Member Presley, thank you for inviting me to testify today. It's also always great to see my longtime former boss, Mr. Luke Temeyer, on the subcommittee. Since leaving his staff, I've served in a variety of housing policy roles, including as Assistant Secretary of HUD and now President of U.S. Mortgage Insurers. USMI's member companies are in the market every day, deploying private capital to provide access to low down payment mortgage financing, primarily to first-time and low and moderate income buyers, while simultaneously protecting taxpayers from credit risk. While we cannot solve for the scarcity of affordable housing supply or high interest rates, we can solve for what has been the primary impediment for many borrowers, the need for a large cash down payment. With private MI, home buyers can put down as little as 3% and begin to build intergenerational wealth as homeowners. Private MIs are critical partners to the government-sponsored enterprises, lenders, state housing finance agencies, and others on initiatives to sustainably expand access to homeownership. Today, more than $1.5 trillion in mortgages are backed by private MI, and while private MI provides borrowers access to affordable credit, It also protects lenders, the GSEs, and taxpayers from credit risk by deploying private capital in a first loss position. One prominent example is the way private MI has helped de-risk the GSEs. Since they entered conservatorship, private MIs have paid nearly $60 billion in claims, and every dollar paid by a private MI is a dollar that neither the GSEs nor the taxpayers who stand behind them need to pay. Analysis from the Urban Institute found that the loss severity of GSE loans without private MI was 11.2% higher than the severity of losses for loans with it. To that end, if Congress takes up GSE reform, maintaining the congressional charter provision related to private MI and establishing standard coverage as a requirement would ensure private capital can continue to promote safety and soundness in the system. Now I'd like to talk briefly about additional steps policymakers could take to ensure that private MI can play an even more impactful role to support affordability. While conventional mortgages backed by private MI have been the most utilized option for low down payment borrowers since 2018, several U.S. government agencies directly insure or guarantee low down payment loans, most notably the Federal Housing Administration. USMI recognizes the targeted role of FHA and the presence and depth of its taxpayer-funded backstop. It's an important complement to private MI's work, particularly in serving those who may not have access to the conventional market. But as a government agency fully backed by taxpayers, FHA's cost of capital and required capital levels are significantly different than those of the private sector. Policymakers should promote a clear, consistent, and coordinated approach to housing finance that prevents undue competition between government programs and the private sector. When private capital is needlessly crowded out of the marketplace by government-backed programs, it leads to increased risk for the taxpayer. In the conventional market, GSE pilot programs can also shift risks to taxpayers that would otherwise be borne by private capital. USMI was pleased with FHFA finalized a rule on prior approval of enterprise products in which members of this committee took an interest. We believe faithful implementation of this rule will result in proper oversight of GSE pilots and a more transparent and objective process for approving new products and activities. One other area of concern is the recently proposed Basel III Endgame regulation. Consumer groups, mortgage market participants, and members of this committee have rightly observed that the proposal would negatively impact the ability of certain banks to originate and hold high loan-to-value ratio mortgages in portfolio. U.S. bank capital rules should recognize the risk-mitigating benefits of private MI and promote a level playing field among the GSEs, government programs, and bank portfolio executions. One other action Congress could take, though outside of this committee's jurisdiction, is to restore and make permanent the individual income tax deduction for MI premiums that was available for tax years 2007 to 2021. USMI thanks Congressman Buchanan and Panetta for introducing legislation to do just that, the Middle Class Mortgage Insurance Premium Act, of which several members of this committee are co-sponsors. I'd also be remiss if I didn't also thank members of this committee for their work to ensure the SEC's recently finalized conflict of interest rule did not impair the reinsurance transactions USMI's members use to manage risk and capital. We greatly appreciate your engagement on this issue, too. To close, USMI encourages policymakers to continue to recognize the important role private MI plays for low down payment homebuyers, the protection it affords to lenders, and the stability it contributes to the overall mortgage finance system. Thank you.
Thank you, Mr. Appleton. Dr. Hamilton, you are now recognized for 5 minutes to give your oral remarks.
Thank you, Chair Davidson, Ranking Member Presley, and members of the subcommittee. I'm Emily Hamilton, a senior research fellow at the Mercatus Center at George Mason University, where I'm co-director of the Urbanity project. Local governments have imposed numerous limits on what kinds of housing can be built where. Zoning rules, including bans on multifamily housing, restrictions on manufactured housing, and requirements for minimum lot size limit how much housing the market can provide and drive up the price of housing that does get built. These rules are contributing to deteriorating affordability, particularly for households that rent. While the share of households that rent has held quite steady since the 1960s, the share of income the median renter spends on housing has increased by more than 25% since then. Private sector homebuilders can play the primary role in addressing this growing affordability problem, but only with zoning out of the way. I'll provide 3 examples of places that have rolled back land use restrictions, making it feasible to build more housing at lower prices. First, minimum lot size reduction in Houston. Second, multifamily construction through transit-oriented development in the Washington, D.C. region. And third, legalization of accessory dwelling units in California. First, reducing minimum lot size requirements in Houston. In 1998, Houston policymakers reduced minimum lot size requirements from 5,000 square feet down to 1,400 square feet within the city's inner loop. Houston's reform set off a boom in small lot single-family construction. Based on success within the inner loop, policymakers expanded this reform to cover the entire city in 2013. Nearly 80,000 small lot houses have been built since then. The median house price in Houston is lower than the national median, despite decades of higher population and economic growth than in the country as a whole. And that's in part due to this small lot construction. Second, allowing transit-oriented development in the Washington, D.C. region. I'll be the first to say that the D.C. region has plenty of opportunities to reduce barriers to new housing construction. However, relative to most other high-income coastal regions, here we excel at permitting multifamily construction, particularly along transit corridors. Beginning in the 1960s, officials in Arlington County, Virginia, began planning for multifamily construction in areas that were originally developed with low-rise commercial buildings. In part, based on Arlington's success, policymakers in Montgomery County, Maryland, and Fairfax County, Virginia, have also embraced transit-oriented development in more limited areas. DC has followed suit, allowing new neighborhoods to be built in formerly industrial areas like in Noma and the Navy Yard. Among the regions where many of the country's highest-paying jobs are located, including Boston, Los Angeles, New York, San Francisco, Seattle, and Washington, Washington has the lowest median house price, and one reason is because it permits multifamily housing at double or more the rates of Boston, Los Angeles, New York, and San Francisco. And third, legalizing accessory dwelling units in California. Given the growing housing supply and affordability problems Americans are facing, state policymakers are beginning to set limits on localities' authority to curb housing construction. California, where these challenges are the most dire, has led the way. The state has been particularly successful in legalizing accessory dwelling units. These are typically small apartments located at the site of a single-family house. In some parts of the state, most notably Los Angeles, ADU construction drastically accelerated following these reforms in 2017. Today, 1 in 4 residential permits in the city of LA is for an ADU. To wrap up, local zoning rules are a key contributor to the U.S. housing affordability challenges. As I've shown, zoning rules limit housing construction, especially relatively low-cost housing construction. Examples from across the country show that where policymakers have lowered these barriers, housing construction has increased. Places that are more open to housing construction see improved affordability compared to their peers with more barriers to new housing. The private market can improve access to housing and reduce house prices when and where it's allowed to.
Thank you, Dr. Hamilton. Mr. Michel, you are now recognized for 5 minutes to give your oral remarks.
Good morning, Chairman Davidson, Ranking Member Presley, members of the committee. Thank you for the opportunity to testify today. My name is Norbert Michel. I'm Vice President and Director for the Center for Monetary and Financial Alternatives at the CATO Institute. The views that I express here today are my own and should not be construed as representing any official position of the CATO Institute. In my testimony, I argue that the best way for the federal government to make housing more affordable is to reverse course on many longstanding federal policies. It is true that home equity frequently represents a large portion of many Americans' wealth, but it does not follow that federal policy should promote home ownership or especially housing debt. In fact, home equity depends largely on home price appreciation, an attribute fundamentally at odds with affordable housing. and federal policies undoubtedly make housing, as well as other goods and services, less affordable, particularly because they artificially boost demand in inherently supply-constrained markets. Over approximately the last decade, home price growth rate was nearly double the income growth rate, as through much of the last several decades. And I'd like to highlight three particular problems with recent federal policies. First, through only three institutions, Fannie Mae, Freddie Mac, and the FHA, the level of federal involvement in housing has been escalating for decades, along with housing costs, a correlation that is no accident. Combined, just Fannie and Freddie stood behind more than half of outstanding mortgage debt for decades, in some years being responsible for a share of close to 70% of the market. From 2009 to 2020, Fannie and Freddie alone had an annual share of the mortgage-backed security market averaging 70%. If we include Ginnie Mae securities backed by FHA mortgages, then the federal share of the MBS market averaged 92% per year over that period. Second, wasteful federal spending since 2020 has only worsened the effects of these demand-inducing housing policies. Congress passed 5 massive spending bills starting in November of 2021, totaling $7.5 trillion. This spending spree worsened inflation and exacerbated both labor market problems and pandemic-related supply chain problems, thus leading to abnormally high price increases that Americans continue to experience today. Third, the Federal Reserve has contributed to higher housing costs by continuing to support the MBS market and therefore fueling more leverage to buy homes. The Fed is guilty of this policy mistake even in a low interest rate environment when prices naturally tend to rise, reflecting the lower rates. Prior to the 2008 crisis, the Fed rarely held any MBS on its balance sheet, but now acts as though it can't operate without holding massive quantities of those GSE securities. Between 2010 and 22, the lowest amount it held was $827 billion. From March of 2020 to March of 22, the Fed went from holding $1.4 trillion to $2.7 trillion. And although the amount has declined a bit, it still stands at nearly $2.5 trillion. In the face of rapidly rising price level and steadily rising home prices, this mortgage-backed security purchase policy made very little sense. More broadly, the problem with virtually all of the federal housing policies that we have is that they are geared toward increasing demand. And because housing markets are almost always supply constrained, these policies constantly put upward pressure on both prices and rents. These policies include everything from supporting the GSEs to providing housing allowances to military and other government employees, as well as providing Section 8 vouchers. The economic principles are exactly the same for both assistance and subsidies that pay for housing. They place upward pressure on prices because they increase the number of dollars chasing the same amount of housing. And they do nothing to address the broader economic or social issues that affect people's ability to earn higher income and build wealth. Nothing, that is, except put people into a riskier economic situation. Congress should start to pare back federal involvement in housing markets, and I'll close with just 3 what I call sensible changes. First, define and enforce the excessive use provisions that are in Fannie and Freddie's charters. Second, narrow the GSE's focus to the financing of only primary homes. In other words, no more vacation home financing. And third, limit the loan loss coverage in the FHA mortgage insurance program to 50%, down from 100%. Thank you for your consideration. I'm happy to answer any questions that you have.
Thank you, Mr. Michel. Ms. Royster, you are now recognized for 5 minutes to give your oral remarks.
Good morning, Chairman Davidson, Ranking Member Presley, and members of the subcommittee. Thank you for the opportunity to testify today. My name is Arianna Royster. I am the president of Borger Residential, a locally owned firm with about 10,000 multifamily units. I am pleased to testify on behalf of the nearly 100,000 combined members of the National Association and the National Multi-Housing Council. I would like to share with you today the housing provider perspective on the affordability challenge, some obstacles we face in meeting this challenge, and several potential solutions. My written statement contains greater detail in all of these areas. The nation's housing affordability challenge boils down to one simple fact. There are simply not enough rental units to meet the growing consumer demand. Decades of undersupply have set us back. The nation needs 4.3 million new apartment homes by 2035. At the same time, our members report that economic and regulatory challenges are causing them to cut back significantly on development activities, in some cases by as much as 50%. Making matters worse is the increasing challenges in operating apartments. Industry data shows, on average, expenses increased 9.3%, with insurance and labor costs as leading contributors. Insurance is especially troubling, as some multifamily property insurance premiums soared 26% year over year. Out of every dollar of rent collected, 93 cents is allocated towards operational expenses. With such a slim margin, rising operating costs impact the sustainability of rental housing while placing additional upward pressures on rents. The expanding federal regulatory environment is a growing challenge as well. State and local laws already heavily regulate the relationship between a rental housing provider and their residents. Adding federal requirements increases market uncertainty, confuses residents and housing providers, and disincentivizes investment in housing. For example, the White House blueprint for a renter's bill of rights issued earlier this year greatly concerns the rental housing industry. While well-intentioned, it contemplates sweeping changes to federal housing policy, including significant reach by the federal government into the relationship between residents and housing providers, and even rent control for properties backed by Fannie Mae and Freddie Mac. The most significant regulatory, administrative, and political barriers to the development of new rental housing are often imposed at the state and local levels of the government. These must be addressed to expand access to housing. We urge Congress to consider several strategies to address the housing affordability challenge. First, redouble efforts to incentivize states and localities to remove or mitigate local barriers to development of rental housing by passing the Yes in My Backyard or YIMBY Act, H.R. 3507. The industry thanks Representative Flood and Kilmer for their leadership on this important bill. Second, improve the Section 8 Housing Choice Voucher Program, which is the primary method for adding 2.1 million low-income households pay their rent. Improvements are needed to encourage more voluntary private sector participation and streamline regulations so federal dollars are used effectively and efficiently. The Choice and Affordable Housing Act, H.R. 4606, addresses many of these issues. We appreciate the leadership of Ranking Member Cleaver and Representative Chavez de Remimer for this stewardship on the bill. We urge the committee to consider this important legislation. Third, Congress and the administration must keep the housing provider-resident relationship where it belongs, at the state and local level. One proactive step is to support a bill sponsored by Representative Loudermilk, H.R. 802, the Respect State Housing Law Act, which ends the CARES Act 30-day notice to vacate requirement, returning the eviction policy back to state and local levels where it belongs. Finally, both Congress and the administration must reject rent control as a viable solution to housing affordability. Decades of research and real-world case studies show that rent regulation devastates rental housing and harms affordability. Ensuring an adequate supply of quality housing is critical to continued economic prosperity and household stability for Americans nationwide. Federal policymakers should focus on sustainable solutions and avoid any new policies that further exacerbate existing challenges and inadvertently harm consumers in the process. I thank you for the opportunity to testify today. I look forward to your questions.
Thank you, Ms. Royster. Ms. Yentl, you are now recognized for 5 minutes to give your oral remarks.
Thank you. Chairman Davidson, Ranking Member Presley, and members of the subcommittee, thank you for the opportunity to testify today. Housing costs are out of reach for too many of the lowest income renters in America. In your districts and in your hometowns, rents are far higher than what the lowest income and most marginalized people, including seniors, people with disabilities, veterans, and working families, can pay. As a result, 10 million of the lowest income renter households pay at least half of their limited income on rent, leaving them without the resources they need to put food on the table, purchase needed medications, or otherwise make ends meet. Paying so much on rent leaves the lowest income families always one financial emergency or unexpected expense away from facing eviction and, in worst cases, homelessness. During the pandemic, policymakers responded to unprecedented need with historic protections and resources that cut evictions in half, kept millions of renters housed, and moved many people experiencing homelessness to safety. Many of these essential measures were bipartisan, and they significantly reduced housing instability and unnecessary suffering. During the pandemic, Congress showed that when it has the will, it can effectively and meaningfully help low-income renters and people experiencing homelessness access stable housing. And Congress also showed that this can be done in a bipartisan way. Today, renters are struggling more than ever. Just as pandemic protections expired and emergency resources were depleted, renters re-entered a brutal housing market with skyrocketing rents and high inflation. As rents increased, so too has homelessness. The US GAO has found that a $100 per month median increase in rent is associated with a 9% increase in homelessness in that community. Over the last few years, rents increased by nearly $200 per month. Even with the recent stabilization of rent costs, the rapid inflation during 2021 and the first half of 2022 has done significant damage to affordability, especially for the lowest income renters. While reducing restrictive local zoning is necessary to ensure the market can respond adequately to housing demand in many communities, such improvements on their own won't make housing affordable to extremely low-income households. The market on its own can't build and operate apartments affordable to households with the lowest incomes because the rent such households can afford to pay doesn't cover the costs. This is a basic market failure that requires the federal government to fill in the gaps to protect tenants and prevent homelessness. This can be done through long-term investments to, one, make rental assistance universally available to all eligible households in need, to preserve and expand the supply of homes affordable to people with the lowest incomes, 3, provide ongoing resources to prevent evictions and homelessness, and 4, strengthen and enforce renter protections. And there are a number of bipartisan bills before this subcommittee that would advance these goals and have a measurable impact on the housing crisis, and I urge the committee to advance them. Bills such as the Family Stability and Opportunity Vouchers Act, the Eviction Crisis Act, and other bipartisan bills to improve and streamline existing housing programs, build housing for people with the lowest incomes, improve oversight of federal disaster housing resources, and increase access to fair and affordable housing. I also urge this committee and Congress to advance comprehensive solutions, such as those in Representative Waters' 2 essential bills, the Housing Crisis Response Act and the Ending Homelessness Act. The bottom line is this: rents have skyrocketed, eviction filings are rising, and homelessness is increasing. The country's lowest income people are struggling to stay housed, but there is a path forward. Congress can, just as it did during the pandemic, act in a bipartisan way to save lives, save money, and provide housing stability for many. Thank you again for the opportunity to be here today, and I look forward to your questions.
Thank you, Ms. Yendel. The chair now recognizes the ranking member of the full committee, Ms. Waters from California, for 1 minute to give an opening statement.
Thank you very much, Mr. Chairman. I would like to request the ability to take a moment of personal privilege to acknowledge the announcement of our chairman will be retiring at the end of this term, if I may. Thank you very much. Again, I would like to take this moment of personal privilege to acknowledge the announcement of our chairman will be retiring at the end of this term. I can say that when Republicans took control early this year, many Democrats on this side, including myself, were wondering what type of chairman Mr. McHenry would be, and 2 words that are often used are fair and respectful. He has run this committee in a way that respects the importance of debate, although our side has sometimes used the rules to extend that debate and has ensured that all members, Democrats and Republicans, have a chance to share their views. And while we don't agree on every policy, or many for that matter, I have personally worked well with the chair on many issues, from passing a national emergency rental assistance program and significant resources for community development, financial institutions during the pandemic, to reauthorizing the Terrorism Risk Insurance Act and the Export-Import Bank. Well, eventually we got to good on that one. He and I were up until 3 a.m. in the morning on that bill, and many of you may not know that we also worked closely together passing legislation before he rose to his leadership position to improve crowdfunding rules and to enable angel investors to support small businesses. I will also say that I recognize that this decision to retire was likely not an easy one, but the American public appreciates the service that he and his family have given over the past 20 years. And I hope that the chairman knows that we still have work to do, because I know there are many other items that are possible for us to continue to prove to the American people that bipartisanship is still possible. With that, I'll go on to my 1 minute, if I may.
Ordered.
Thank you. From urban to rural America, there simply aren't enough affordable homes, and the gap between supply and demand continues to grow during one of the worst housing and homelessness crises our nation has seen. The House Republicans have put forward proposals that only exacerbate the problem. Namely, they want to slash federal housing programs by 30% and hope the private sector fixes it. It is also telling that despite mortgage rates nearly quadrupling to 8% and housing costs going up 47% since the pandemic. Now, this is the first hearing that we've had that was focused on housing affordability. And so I'm hopeful this hearing finally means that my friends on the opposite side of the aisle are ready to join us Democrats and pass legislation to end the affordable housing homelessness crisis. Thank you, and I yield back the balance of my time.
Thank the ranking member. We'll now turn to member questions, and I recognize myself for 5 minutes. Mr. Michel, I thought your testimony highlighted the consequences for some of our approach. We spend money as if tax collection doesn't matter, as if deficits don't matter, and we rack up massive debt. We spend money more than we can collect in taxes. We've spent money more than we can even have people buy up in debt. So the Federal Reserve, as the lender of last resort, has monetized that debt, not just the $2.5 trillion of mortgage-backed securities, but they've loaded up on treasuries back when they were really low. And we've shown that I think we can print money. That part of modern monetary theory is true, but we've shown that you can't necessarily buy the same amount of stuff with the money that you've printed. This is showing up in big ways in inflation, and the price distortions of the Federal Reserve's ongoing buying of mortgage-backed securities kind of exacerbates the problem of mortgage-backed securities, the discovery of the right interest rate. Frankly, we're not sure whether the rate is artificially high or artificially low because you can't get a true discovery of the price signal. But I just wonder if you could tie together a little more the idea that this does inflate the price. And we're seeing across the country as much as 6 times the median income. So essentially 2 incomes is the only way you can afford to purchase a house in the historic metric. So could you talk a little bit more about the price discovery with the demand side policies, and doesn't that lead to a problem where we need more supply?
Well, so you're always going to have supply constraints in housing markets, whether it's a lack of available land where people want to live, or whether it's the fact that it takes a little while to build a house or an apartment building. So on layering on top of that, everything that we do from a regulatory perspective is to make it easier to get a loan. So there's constant pressure to lower down payment requirements, to increase down payment assistance, to relax underwriting restraints even, or restrictions even, and make it easier to get a loan with a lower income than previously. All of those things take away any incentive for any seller to lower the price. They do the opposite. They increase an incentive to increase the price. And that's what we've been seeing for decades and decades and decades. This has been going on for a long time. We sort of have short memories, but this happened with the FHA in the late 60s. We kind of took a break, and then it came back again in the 2000s, and we're doing it again.
Well, thank you for that. And I just turned to Mr. Appleton. You know, when you look at a situation where you've got 82% of the market has an interest rate below 5%, and rates are closing on 8%, this is a dynamic that is affecting prices and availability and supply as well. Historically, people want their homes built, already have a home. They'll go with new construction often, and that turns into more affordable houses. What's that dynamic like right now in affecting affordability?
So look, I think to your point, there is a lock-in effect with those who have homes at historically low interest rates, and coupled with the fact that we have historically underbuilt supply since the great financial crisis, particularly entry-level supply for a lot of the reasons discussed earlier. That's why the private mortgage insurance industry is dedicated to deploying private capital to helping creditworthy Americans, home-ready Americans access the mortgage market with less than a 20% down payment.
Thank you for that, and appreciate the emphasis on private sector there. But you know, one of the themes we're going to highlight extensively this morning is the need to increase supply of housing to deal with affordability challenges. And one way we do that through zoning reform and mandating high-density housing often is something HUD wants to do. They want to reach past local. And you know, Dr. Hamilton, how do we strike this balance between efforts in Washington to have central planners say, no, we know right here you need high-density housing, and the ability for local governments and local communities to make their own decisions about their planning and zoning?
Thank you, Chair. I do think this needs to be primarily an issue of state and local reform. Generally, the proposals that we hear from the federal government are to encourage localities to reform their land use restrictions through federal spending programs. But there's a mismatch between this tool and the places where we most need to see reform. In general, the most exclusionary localities are also the highest income localities where federal grants may mean the least. I do think there's absolutely a role for members of Congress and other leaders in DC to use their bully pulpits to draw attention to this matter.
Thank you for that. My time's expired, and I now recognize the gentlewoman from Massachusetts, Ms. Presley, for 5 minutes.
Thank you, Mr. Chair, and thank you all for joining us for this critical hearing. I've been in Congress now 5 years, and the best advice I received in freshman orientation was, you know, in the process of legislating and governing, it is very easy, long days, to forget the plot. And the plot is the people. And I do believe that on the issue of housing, this committee has lost the plot. It has taken us 11 months to have one hearing on housing, when this is an issue of great consequence, determining health outcomes, social and economic mobility. It is a transcendent issue. It is urban, it is rural. And when I'm in community, and in fact, I had a town hall last night, a teletown hall with thousands of my constituents, and housing dominated that discussion. So let me make it plain. Housing is a fundamental human right. But as home prices have risen and rents skyrocketed, it is a right that has become less and less attainable for working families across our country, and especially in the Massachusetts 7th, where the cost of a single-family home is 11 times greater than it was in 1980. For a family in the greater Boston area to purchase a median single-family home, they would need an annual income of at least $300,000. So we are pricing out an entire generation from home ownership. This is one of the greatest challenges of our time, and we have got to confront it and do so thoughtfully and with urgency. Inclusionary zoning laws are a major contributor to our housing shortage. For decades, inclusionary zoning laws have excluded people of color, immigrants, people with disabilities, and low-income families from living in certain communities. Ms. Gentle, how has single-family zoning and the prohibition on building multifamily housing stifled the supply of housing? and raised housing prices?
Sure. So one of the challenges in our housing market is the supply of apartments not keeping up with demand. So in many communities, there's literally not enough apartments for the people who live there or who want to move there. And it's often restrictive local zoning that is to blame. And these local laws restrict the construction of often any kind of apartments, and especially affordable apartments, which drives up costs for everyone, squeezing the lowest income people the most. And these kind of restrictive local zoning laws often maintain and worsen segregation and racial inequities. So the federal government should do all it can to incentivize or require states and localities to remove these restrictive local zoning laws so that the market can build apartments for middle-income people. But even when that happens, the housing will not be affordable for extremely low-income households, because even if those restrictions aren't in place, the private market on its own can't build and operate apartments that are affordable to people with extremely low incomes, because the rent that they can pay doesn't cover the costs to operate and maintain those costs. So for this kind of a market failure, government intervention, federal government intervention in the form of subsidies is necessary to make those apartments affordable to people with extremely low incomes.
Thank you. And, in that our racial wealth gap continues to grow, I'm also concerned about the reality of modern-day redlining. Chairman, I ask unanimous consent to enter a 2022 article by WBUR titled, "Black and Hispanic People Are More Likely to Be Denied Mortgage Loans in Boston," into the record. This report found that in Boston, when white applicants applied for a mortgage, the denial rate was approximately 5%. But for Black and Latinx applicants, the denial rates were 15.3% and 12.7% respectively. This is modern-day redlining, period. Michel, how does lending and housing discrimination impact the homeownership opportunities for communities of color, and what reforms do you recommend to curtail these unfair practices?
Well, discrimination in lending is against the law, but it absolutely continues in practice. And I would share some statistics from our colleagues at National Fair Housing Alliance that have shown that fair housing complaints in 2022 have been at the highest record ever, and complaints especially around source of income discrimination or discrimination for people experiencing domestic violence has been especially pronounced. And even with the filing rates being as high as they are, many more cases of discrimination go unreported. So the problem is pronounced.
The gentlelady's time's expired. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and I want to thank the witnesses here today. This may be one of the best panels that we've ever had on this subject. Usually we just hear send more money, and y'all have brought forth some really good suggestions for improvements. Mr. Chairman, I do wish we could have also included the National Association of Realtors in this. I think they have quite an impact on the
Duly noted.
transactions involved, but, and next time, hopefully we'll include them. But y'all were really good, and I appreciate your suggestions. You're very enlightening, much broader than usual. But it's especially good to hear what some of the local and state governments are now starting to actually do, to take action to be part of the solution to that problem. But I wonder if Congress could do just one thing to address the homeless problem, what would that one thing be? And I'd like to ask each of you to answer that and start with Mr. Appleton.
Yeah, I think that if it could do one thing, from a financing perspective, it would ensure that there's a clear, coordinated, and consistent housing finance policy so that we're not crowding out private capital. And then on the supply side, make sure that we're doing all that we can to encourage the construction and development of entry-level housing. I think that's where we've been missing.
Thank you.
I think that there is an opportunity for the federal government to take a more active role in encouraging state or local zoning reform, but we haven't seen proposals that are quite designed right yet. Such a program should be designed as a race to the top program that rewards housing market outcomes rather than reforms on paper that may not actually lead to more housing being built at lower prices.
Thank you.
I'm gonna take a slightly different tack there. I mean, I think perspective is important here, and I think that the politicians and members of Congress have an important job into giving that perspective. In terms of homelessness, we have, according to HUD, roughly 0.1% of our population that's homeless, and I don't really consider that to be a housing crisis. You're talking about roughly 500,000 people in a nation of 333 million. So that perspective, I think, is very important.
Thank you. I would say if we could pass the Yes in My Backyard, the YIMBY Act, because as we stated, supply is the major issue in terms of housing affordability. I think most of the panel has recognized that. And we need 4.3 million new multifamily units by 2035. So just lowering the barriers for housing development would be helpful.
Thank you.
Thank you for the question, Mr. Posey. Ending homelessness requires that we make homes affordable to people with extremely low incomes. So that requires subsidies in the form of rental assistance, expanded Section 8 vouchers, in terms of preserving and expanding our public housing programs and other affordable housing solutions for the lowest income people. And creating an access to this type of affordable housing with wraparound supportive services has been shown again and again in the research and the evidence to be highly effective at ending homelessness. And there's many communities in your district and your state that have effectively ended veterans' homelessness using this housing first approach.
Very good. Again, I thank the witnesses and yield back, Mr. Chairman.
Thank you, Mr. Posey. The chair now recognizes the ranking member, Ms. Waters, for 5 minutes.
Thank you very much, Mr. Chairman and members. While we sit here calmly talking about housing, I disagree with Mr. Michel. I don't know what you call a crisis, but 75,000 people on the ground in the greater Los Angeles area is a crisis. 600,000 people in this country on the ground every night is a crisis. So I don't know how you define one, but we cannot have a hearing on affordable housing and not really talk about homelessness. I'm so proud to say the last Congress, under my leadership, committee Democrats secured critical new investments in housing through the American Rescue Plan Act, which helped rehouse people experiencing homelessness and kept over 11 million struggling renters and homeowners housed. We have proven time and time again that when we invest in federal dollars into affordable housing, we can prevent homelessness and evictions, and we can save taxpayer dollars spent over the long run. So despite the progress we've made to promote housing stability during the pandemic, the fact of the matter is that housing costs are too damn high, and it's pushing more and more people out of their homes. Indeed, the Government Accountability Office found that with every $100 increase in median rent, there is 9% increase in homelessness. So, Ms. Chantel, can you explain what the research tells us about the leading causes of homelessness, and what are some of the examples of cost-effective solutions, and whether or not you agree with me that there is a housing crisis?
There is absolutely a housing crisis, Mrs. Waters. Thank you for the question. And housing costs are the primary driver of homelessness. The one thing that all people experiencing homelessness have in common is lack of access to a safe, stable, accessible, affordable home. And the research and the data and best practices show again and again that the best way to address homelessness and end homelessness is to provide access to an affordable home with, when needed, supportive wraparound services. And there's many communities, including LA, that use this housing first strategy to address homelessness And in the city of LA, every day, they're able to house about 207 people who are experiencing homelessness, get them into permanent housing. But on the same day in LA, about 225 people become newly homeless. So we're able to address individual homelessness. What communities aren't able to do is stem the tide of new people becoming homeless because housing costs are so high. And so the primary challenge there is housing affordability. And bills like yours, the Housing Crisis Act and the Ending Homelessness Act, would effectively end homelessness in the United States because it provides the level of resources in the proven solutions needed to end homelessness.
Michel, I understand that someone here said that the federal government is spending money and they have not been able to solve the housing crisis. Can you explain, if you have time, that whether it's inflation or whether it is, a loss of a job, whether it is a COVID, what have you, that no matter what money you have spent, you may have to spend more because there is a crisis?
So it's all of those things combined, Congresswoman, and the housing crisis impacts people differently, but across the board, there is a severe shortage of homes affordable and available to the lowest income people. Across the country, there's a shortage of 7.3 million homes affordable and available to those lowest income people. So another way of saying that same number is for every 10 of the lowest income households, there are fewer than 4 apartments that are affordable and available to them. So the other 6 households are living doubled or tripled up. They're paying 60, 70, 80% of their very limited income to keep a roof over their heads. And when you spend so much of your limited income on your housing, you are always one financial shock, whether it's a broken down car, a sick child, a missed day of work, or a pandemic, away from missing rent and facing eviction, and in worst cases,
Are we
becoming
talking
homeless.
about this is a problem that could occur with any American family, that this is not just about urban living, it's not about rural, it's about everybody?
The shortage of housing for the lowest income people is pervasive, and it exists in rural, urban, and suburban communities alike.
Thank you very much. I yield back.
Thank the ranking member. The gentleman from Missouri, Mr. Lukemeyer, who's also the chair of the Subcommittee on National Security, is now recognized for 5 minutes.
Thank you, Mr. Chairman. One of the problematic features of previous rounds of the Basel capital requirements, in my mind, has always been the concept of importing a regulatory framework developed by international bureaucrats outside of the oversight of Congress and the American public. Basel III Endgame proposed in July by the Federal Reserve, OCC, and FDIC is even more excessive than previous versions. It diverges from Basel not by appropriately recognizing unique features of our American financial system, in particular our housing market, but by ignoring what makes our country unique and then gold-plating what was developed by bureaucrats in Switzerland. Mr. Appleton, do you care to comment on how the excesses of the Basel III Endgame will impact the housing market?
Sure, thank you for the question. You're exactly right. The Basel III Endgame fails to recognize the uniqueness of our market and then adds excessive mortgage risk weights on top of it. One of its most significant failures is the lack of credit for private mortgage insurance and the strength and resilience it brings to our housing finance system, which stands in stark contrast to FHFA's capital rule, which recognizes its loss-absorbing benefits. At the end of the day, Basel III Endgame, as proposed, will limit the ability of low-down payment consumers to access credit from commercial banks, depriving them of options and shifting businesses to loans directly or indirectly backed by the federal government.
Thank you for the answer. I know that one of the concerns I have is that there seems to be no cost-benefit analysis that was done on this rule. You talk to the regulators who propose this, and they will admit that. I assume they haven't contacted your entity, your association, to see once what kind of a cost you would anticipate with the rule.
No, and in fact, the private mortgage insurance industry adopted a number of enhancements since the last round of bank capital regulations were implemented. And so, and those regulations actually recognize private mortgage insurance. And so we've enhanced the industry with robust capital and operational standards. At the same time, this new proposal, provides zero credit for it. So it's just totally disconnected from reality.
Yeah, the rule itself is actually bad deal from, and there's so many bad things in it, they need to start over with if they actually want to go down this road, in my opinion. But thank you for that. This morning in the Wall Street, there's an article it's the headline, San Francisco developers tackle housing woes. And in there it talks about a new 71-story rental tower that they want to build. But in here it makes a comment that says, and I quote, elsewhere, 10 office to residential conversion plans have been submitted to the city. And then later on it says, property developers say that the plans for the new projects reflect government efforts to reduce costs and eliminate red tape for new construction and conversion of office buildings to apartments. So, we talked a little bit here just a minute ago about increased costs. Dr. Hamilton, with this situation here, it points to the problem that we have, I think, in building housing at a cost that people can afford, and we have rules and regulations that in this situation are either being changed or waived to enable people to do this. Can you see this as a benefit, and can you give me an example of the percentage of rules and regulations as it is of the rent, or the cost, I guess I should say, the cost of a rent or a housing project?
Thank you, Congressman. That's a fantastic question. And unfortunately,
I only ask fantastic questions. So.
access to data on the specifics of local land use regulations has been a real barrier to economists producing solid estimates on the portion of housing costs that are due to zoning and other permitting process barriers. But one estimate that's now about 20 years old finds that in the most expensive metros in the US, about half the cost of housing is due to land use regulations.
50% of the cost. I know each one of you this morning, I think, talked about rules and regulations and zoning as a cost, but you're quantifying it at about half the cost of a home and or an apartment is 50% due to rules, regulations, and zoning requirements?
That's what one study from, again, about 20 years ago found for the San Francisco Bay Area, the most regulated.
That's a 20-year-old figure.
That's right, and we know
my
it's
gosh.
gotten much worse.
Can somebody give me a figure basically of what percentage of an individual, the average income in this country, what percentage of that is used for housing? What percentage of an individual's income for an average individual making whatever it is in this country, average rate, would go to housing?
Well, experts would
Somebody's got
say that no more than 30% of income should go towards housing costs.
I'm not asking how much should go. I'm asking what the figure is today. Does anybody know what the figure is today?
It's more than half.
More than half. So today, the average individual is paying more than half of their income for housing. Is that what you just said? Okay, and we've got a rule here. The rules and regulations cost almost half of what the cost is. There's our problem. There's our problem. Thank you, Mr. Chairman. I'll yield it back.
I thank the gentlewoman from New York, Ms. Velasquez, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Royster, affordable housing communities across the country have faced a volatile insurance market for many years now. There is growing concern that insurance carriers are walking away from affordable and middle-income housing because liability, umbrella, and other lines of coverage have become out of reach for many property owners. Can you talk about what Congress can do to address this and how we can ensure that affordable housing properties and renters are not being unfairly treated in the insurance markets?
Thank you, Congresswoman Velasquez. Looking at recent data that shows property owners faced 15% in liability insurance increases and 17% in umbrella coverage year over year. But it's also not uncommon to see triple-digit increases, especially in affordable housing communities. This was information that was reported by our members, but I will speak to you on my personal experience in terms of the rising insurance costs. We manage a number of properties, the majority of our portfolios in Washington, D.C. And first, the costs have gone for us from 15 to 32%. But more importantly to note, there are only a few carriers that will actually write policy in Washington, D.C., which makes the cost unaffordable. I'll give you an example of the National Church residences that have seen their property insurance liability increase over 400%.
Do you have any advice in terms of what Congress can do to address this issue?
So I think Congress should use its regulatory and oversight authority to monitor activity in the insurance market while looking for ways to drive increased capacity in the insurance and reinsurance markets to bring the costs down.
Thank you. Ms. Gentile, as you know, the housing affordability crisis requires federal action, such as the collection of data. Unfortunately, there are significant data gaps impacting Puerto Rico. You know, that colony that we have responsibility toward, where a housing affordability crisis persists for over 3.2 million American citizens. I recently urged HUD to include Puerto Rico in the American Housing Survey, which provides critical information of the nation's housing stock. Can you elaborate on how including Puerto Rico in this survey will help offset their housing challenges, including the lack of affordable housing?
So the American Housing Survey is the only national representative survey that gives us information not only on housing affordability, but on the quality of our nation's housing stock. The sample size for the AHS is small, so we're only able to get specific information on the 15 largest metro areas and some states. It would be useful if we were able to get information, certainly on Puerto Rico's housing stock quality, and having the AHS increase its sample size in order to get that information is important, but HUD would need additional resources in order to do that.
Thank you. Ms. Gentile, it is not secret that LMI and communities of color are often the most impacted by devastating flooding and other climate-related events. Within these communities, residents of affordable housing or smaller rental properties can be disproportionately impacted as federal investment is often directed elsewhere. How can we leverage federal resources and tools to drive better disaster and mitigation efforts toward the most vulnerable?
So lower-income communities and often communities of color are often located in lower-lying areas, and they are also communities that historically haven't been given the level of infrastructure dollars needed in order to protect people from the subsequent flooding. So this creates a vicious cycle of not only keeping people in harm's way, but increased costs then when it comes to emergency response and rebuilding. Codifying the CDBG-DR program would be an important step in ensuring that people in these communities get the resources that they need and that those precious few federal resources for rebuilding and in some cases resilience are targeted to the communities with the greatest
Thank you.
needs.
Mr.
Thank you.
Chairman, I yield back.
Thank you. The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank all the panelists for coming. You know, we talk about affordable, we talk about housing shortage, apartment shortage. This isn't that complicated. When you have anywhere from 23 to 28% regulatory costs, government compliance going into the cost of a $400,000 house, that's $98,000 that the homeowners are having to bear. When you see what I saw happen to the manufactured housing or attempted to, you have bureaucrats trying to tell them how to make a home more energy efficient and mandating the ceiling joists, mandating the duct blaster test, mandating carbon emissions from a manufactured house is really one of the few affordable homes that can be built. When you see credit reports, there's an attempt to take away medical debt that's unpaid. It's insane. And it's very simple. You get government out of the way. You get federal regulations out of the way. And politicians, I recently put a football analogy. I had a talk show host who was lecturing Nick Saban over what he needed to do to improve his team. I thought that's how politicians are. A lot of times we don't know what we don't know. but you get politicians out of the way. This has got to be settled on the local level. If you want to increase demand, increase housing, make it so the eviction notices can go out. You have to get paid back. Somebody pays for this. So the other thing, we talk about homelessness. What about the 8 million that are coming across this border? Where are they going to go? New York City's finding it out. What are they going to do with it? So get government out. Stop this flow of people in this country that have not paid into the system, and get the regulators out of the way. You go to your experts. The person calling into Nick Saban, I think, is not the best one to tell him what to do. He's in it. So go to the experts that actually do it and have their money invested. Michel, let me ask you, you mentioned make housing affordable. Two things. Define what affordable is, and secondly, is you call for more rental assistance, more federal subsidies. Is the federal government, does it set the gold standard for financial accountability?
So affordability means a household doesn't pay more than 30% of their income towards rent. And
No, give me affordable. What's an affordable house or an apartment? Give me what, in your terms, because I don't know what that is.
I just did. It depends on what a person's income is. So different people can afford different amounts towards their housing costs, but nobody should pay more than 30% of their income towards rent or towards their mortgage.
The federal government is the answer for that?
Well, for extremely low-income households, when I'm talking about households with extremely low incomes, I'm talking about in your district, for example, a single person who has a disability or is a senior and is on an extremely limited fixed income of about $12,000 to $15,000.
Okay, I'm running out of time.
Or I'm talking about a working family with a combined household income of no more than $25,000. For these households, the private market on its own, and you can ask any housing developer, whether they are for-profit or nonprofit, they will agree that they can't on their own make housing affordable.
Okay, so you make it affordable
with such low
by having subsidies from the federal government, is
So
that what you're saying?
It requires an intervention from the federal government, given the scale.
And where's that money coming from?
In the form of subsidies.
And where's that money coming from?
Outlays for housing assistance is about 1%.
Yeah, but where is the money coming from on subsidies that you say the federal government, which I think is in the red to a tune of $36 trillion, where's it coming from?
I would say 1% of outlays.
Okay, you're using percentages, but you're not answering my question. You really aren't. I mean, just tell me if it's coming from the taxpayers. And I'm saying...
Sure, we can absolutely increase taxes for
Increase taxes.
corporations and for high-income earners in order to afford to have people have their most
That's a utopian dream
basic
that you're talking about.
met.
You're saying
Keep a roof over
further
their
in
heads.
debt, further put this country...
Avoid-
Hold on, reclaiming my time, because I got 10 seconds. Putting this country further in debt on the number one indicator of the economy, housing, is the more federal government. That's the opposite that you want to do in the real world. I yield back.
Thank the gentleman. The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
I'm just curious, Ms. Yentl, do you think providing every child with an education is a utopian dream?
I don't.
Do you believe providing every child with housing is a utopian dream?
No.
And do you believe, like education, no one can be reasonably expected to succeed in America without access to safe, decent, affordable housing?
Absolutely, and the research shows it again and again.
And on a personal level, I would not be in Congress were it not for public housing and the stability and opportunity it gave me and my family. My own life journey from public housing in the Bronx to the House of Representatives in Washington, D.C. is a product of public investment in affordable housing. And my Republican colleagues would have you believe that there is excessive government intervention in housing. Now, I will concede when it comes to land use, there is certainly exclusionary zoning, which has been a barrier to addressing the affordability crisis. But when it comes to funding, the Republican talking point could not be farther from the truth. The problem is not too much government investment in affordable housing. The problem is too little. There is insufficient housing supply and insufficient housing subsidy. What is the extent of the gap between the demand for affordable housing and the supply of affordable housing in the United States?
For households with the lowest income, there's a shortage of 7.3 million homes, affordable and available to them. So another way of saying that same number is for every 10 of the lowest income households throughout the country, there are fewer than 4 apartments that are affordable to them. And if I could just say that we talk a lot about the cost of providing housing to be affordable for extremely low-income people, but we don't talk enough about the costs of inaction. It's not like if we're not providing housing for extremely low-income people, we're not paying. We are. We pay as a country to allow for homelessness and housing poverty to persist, and we pay for it through lowered educational attainment, through health challenges for children and families and increased health costs as a result, for families unable to obtain and retain well-paying jobs. There's a study from Children's Health Watch that shows over the next 10 years, we'll pay $111 billion in avoidable healthcare costs because we allow homelessness to continue to persist. So we're paying one way or another. I think a better use of funds is to invest in solutions to keep homes affordable for the lowest income people.
Right, so homelessness and housing insecurity are not only bad morals, it's bad economics.
That's right.
During COVID, we saw essential workers, many of them earning minimum wage, put their lives at risk during the peak of the pandemic so that the white-collar workforce could safely shelter in place and work from home. Is there a single county in America where an essential worker earning minimum wage could afford a one-bedroom apartment?
There are very, very few communities throughout the country where that's possible.
What about a two-bedroom apartment?
There's no community where it's
So out of 3,000 counties, there's not a single area in which an essential worker earning minimum wage could afford a two-bedroom apartment.
That's right.
And do you believe it's wise for Congress to stand by idly while America becomes dangerously unaffordable to its essential workforce?
No, housing is a basic human need, and as you said very well, people can't succeed in other areas of their lives if they don't have a home to go to at the end of the day. Children need a place to study, people need a place to unwind. All of us know the value of home in our lives, and we need to provide that for our essential workers, for everyone with extremely low incomes.
Because I do have a number of colleagues who seem intent on substituting free market fundamentalism for evidence-based policy. Is there any evidence at all that the free market, if left to its own devices, unaided by any government subsidy, can magically create the affordable housing that we need at the levels of affordability that we need?
No, in fact, the evidence very clearly says the opposite.
So suppose there were no government intervention in the form of public housing. Would there be less or more housing insecurity and homelessness?
More.
What if there were no Section 8?
More.
What if there were no LIHTC or tax-exempt bond financing or CRA credits?
All of these are essential ways that the federal government provides resources to ensure that some people with extremely low incomes can stay stably housed, but the funding is far under the need. The federal government only provides funding for every 1 in every 4 households who needs housing assistance and is eligible receives it. So we have what is essentially a housing lottery system in our country where only the lucky 20% gets the help that they need.
Thank you.
Thank the gentleman. The gentleman from Wisconsin, Mr. Fitzgerald, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I want to take the questioning in a different direction. Last month, I sent a letter with 16 of my colleagues on this committee to the banking regulators to raise concerns about Basel Endgame proposed high-risk weights for residential mortgages. One of the major issues that the proposal removes is the ability of banks to use mortgage insurance to reduce the risk weights for low down payment mortgages. A departure from existing bank capital rules and the Federal Housing Finance Agency's capital framework for the GSE. Mr. Appleton, you mentioned in your testimony that private mortgage insurance has been around been around for 66 years. What the committee might not know is that this industry actually was created and has deep roots in my home state of Wisconsin. Why is it important for bank capital rules to recognize private mortgage insurance?
Thank you for the question, Congressman Fitzgerald, and thank you for sending that letter. By failing to recognize private mortgage insurance in the endgame proposal, the bank regulators are making it more difficult for banks to serve low down payment borrowers, service mortgages, or even finance warehouse lines of credit for independent mortgage banks, limiting consumer choice and access to credit. The current rules, as you mentioned, written before the MI industry adopted significant enhancements to its capital and operational standards, allow for a prudently underwritten mortgage with MI to receive a 50% risk weight. So the new proposal that totally ignores this reality should be rescinded. For example, as of the third quarter, the industry already holds 169% of its required capital, and to your point, FHFA's own capital rule recognizes the risk and capital benefits of MI. So if anything, regulators should be recognizing the strength and resiliency of private mortgage insurance more, not less.
So we have a situation where, and this has come up in the committee before, where you have a lot of young adults, those that have attended school, put themselves in a position, many of them couples that find themselves in a situation unable to raise the actual monies for a down payment on a minimal house, which is out of control as a result of the inflation that we've been experiencing across the nation, resulting in housing. And they're just unable to come up with the money to make that down payment. So the builders aren't incentivized to create enough starter homes. It doesn't exist. There's not like two Americas out there. I wish my colleague from New York was still here. He would have everyone think that there's simply this one take on what's going on across the nation. It's happening everywhere right now. Ms. Hamilton, you have specifically discussed the need for housing with 2 to 4 units per building, which is becoming the norm right now for anyone that's developing anything close to a subdivision anywhere in America. And looking at the amount of housing that gets built in total right now, about 4 units per 100 people is being permitted across the country as a whole. It's the only option left for municipalities who know that once they put the infrastructure in the ground, the costs associated with any subdivision is going to be completely out of control. We're talking about modest communities that no longer can put a subdivision in place with housing that's any less than $500,000 per unit, which is clearly out of the reach of almost all Americans that find themselves trying to get their first mortgage. What's the reason for the drop in these types of housing, and is there any type of federal solution that could help with that?
Thank you, Congressman. You're absolutely right that permitting rates are way down from what we've seen relative to times when housing was more broadly affordable. And this is due both to local zoning rules, the rules on the books that limit how much housing can be built and limit the availability of relatively low-cost types of housing, such as duplexes, triplexes, fourplexes, or small lot development. And it's also due to local permitting processes that really lengthen the time and add costs to the building of any type of new housing. I do think this needs to be addressed primarily at the state and local levels, although efforts to encourage this reform from Congress are more than welcome.
Thank you, Mr. Chair. I yield back.
Thank you. The gentleman from Nevada, Mr. Horsford, is now recognized for 5 minutes.
Mr. Chairman, to the ranking member, 122 days, nearly a year into the 118th Congress, and we are finally having our first hearing on housing affordability. Congratulations.
Will the gentleman yield?
No, I will not. Because during the previous chair's leadership, Chair Waters, the committee Democrats held 55 hearings on housing-related issues last Congress. That means I would have had 275 minutes to talk about the issue that is of prime importance to my constituents, so I only have 5 minutes, so no, I will not yield. We are amid a housing affordability crisis that is crippling our country. There have been a shocking 47% increase in national home prices since May of 2020, and that has driven many Americans even further away from the dream of home ownership. Far too many households are forced to continue to rent, and they face unique challenges of their own, as our limited supply of housing simply cannot meet the ever-growing demand. The National Multifamily Housing Council estimates that we need to add nearly 3.7 million new apartment units a year to keep up with demand. That is only to keep up. Even at that pace, we won't even begin to deal with the estimated 14 million unit shortfall that renters face today. For the 21.6 million American households that spend over 30% of their monthly income on rent, they simply can't afford to wait any longer. So this hearing is long overdue. My district in Las Vegas has been one of the hottest real estate markets in the country since the pandemic. And whether a family is looking to purchase a home or simply rent month to month, they are seeing their cost increase through the roof. As you can see, since 2015, Zillow data shows that there have been a drastic 75% jump in the typical rent in Las Vegas to over $1,800 a month. And with an average renter's household income at $51,000, the rent affordable at that income is well short of the $1,286. When we look at the most vulnerable and lowest income renters, the stats from the National Low-Income Housing Coalition become even more alarming, with a staggering 90% of these households facing a difficult cost burden. This should come as no surprise when home sales volume remains depressed, and the average household spends a burden of 29.6% of their income on mortgage or rent. And we can see that most of these low-income households are severely cost-burdened, which means they are spending over half of their income each month just to remain housed. These families are trapped, paying an outsized portion of their income on rent, which limits their ability to build up enough savings for a down payment, and then further perpetuates the racial home ownership gap. And yet, thus far, this subcommittee has been uninterested in advancing any meaningful housing policy during the first session of this Congress. I call foul. And all of the government approach is required to address this crisis, and we need to look both at how to incentivize increases in our housing stock and also how to ensure the homes we do have are sold to real families, households that will form the backbone of our economy. That is why earlier this year I introduced the Housing Oversight and Mitigating Exploitation Act, the HOME Act, to give HUD the data necessary to understand the severity of our housing shortage and to protect everyday Nevadans from being exploited by out-of-state corporate speculators. These massive corporations have been able to pay cash during this period of high interest rates, which have allowed them to purchase almost a third of the homes sold in certain zip codes, 1 in 3. And it is unlikely that the homes that they purchase will ever appear on the housing market again. So I'm deeply concerned by reports and corroborated by the Redfin data that these corporate speculators predominantly target neighborhoods of color and single mothers. The HOME Act would give HUD the tools necessary to investigate these allegations. Not only will HUD be able to collect the necessary data on who these speculators are targeting, but also gives HUD the tools necessary to ensure that we have an equal level playing field. I know my time is concluding, and I want the American people to know, we only get 5 minutes. This is a first hearing. Had we had 55 hearings, I would have 295 minutes to make my case. But because House Republicans don't want to talk about this issue, we don't have the time to advance the policies that matter to the American people. I'm mad, I'm pissed, the American people are pissed, and my constituents are pissed that we don't make housing more of a priority in this country.
The gentleman's time has
I will
well
yield back
expired.
now.
The gentleman's time is thoroughly expired, and the gentleman from New York, Mr. Garbarino, is recognized for 5 minutes.
Thank you, Mr. Chairman. There's no sugarcoating it. Our nation is facing a housing shortage with housing affordability at historic lows for both homeowners and renters. My district on Long Island is no different. Just a little over a month ago, the median home price in Suffolk County reached a record $600,000, an increase of over 9% compared to a year ago. When combined with the fact that the average interest rate for a 30-year loan is still well above the sub 4% rate that home buyers were used to seeing just a couple years ago, it is no surprise that many first-time home buyers struggle to enter the market. Additionally, for many people, saving a down payment of 20% can also be a significant barrier to buying a home. I couldn't even do it, and now on Long Island, it's about $120,000. Given these roadblocks, there are a number of market-based solutions that can play an important role in allowing first-time home buyers. One of those solutions is private mortgage insurance, which I took advantage of when I bought my house, which has put home ownership in reach for millions of qualified borrowers for 60 years. Mr. Appleton, can you explain how private mortgage insurance benefits home buyers, taxpayers, and investors?
Thank you for your question, Congressman. Private MI benefits home buyers by eliminating the need to come to the closing table with tens or even hundreds of thousands of dollars in cash for a down payment. It benefits taxpayers by standing in a first loss position ahead of the GSEs and the taxpayers who ultimately stand behind them. And it benefits investors by promoting prudent risk management, safety, and soundness in the overall housing finance system.
Are there government barriers to private mortgage insurance serving a broader role in the market?
Sure, I think that's a great question. Establishing a clear, consistent, and coordinated housing finance policy would ensure that private capital is not unnecessarily crowded out of the marketplace by programs fully backed by taxpayers. And secondly, we should ensure faithful implementation of the prior approval of enterprise products rule to prevent the GSEs from engaging in inappropriate pilot programs that would cause the enterprises to participate in the primary market, compete with the private sector, and shift risks to taxpayers.
I appreciate that, and like I said, if it wasn't for PMI, I wouldn't be able to own my home now. I wouldn't have been able to buy it, and now I wouldn't be able to afford the increase that we've seen over the past couple of years. So I thank PMI for its existence. Mr. Michel, while we've discussed one longstanding option for home buyers to take advantage of in order to make home ownership more obtainable, there are still a number of other regulatory barriers that hamper the private market. Reducing the number and scope of some of these regulations could do a lot to lower costs of home ownership in the United States. However, given how highly regulated the housing and mortgage markets are, I want to focus for 1 minute on the flip side of the issue. What proactive actions could the FHFA take in order to pave the way for more private market innovation and options for consumers as we seek to reduce the cost of home buying and home ownership for just not Long Islanders, but people all over the country? Whether we're talking about the construction space or even the mortgage insurance space, do you agree that additional innovation, competition, and more choices would benefit consumers?
Yes, they would, and you're not going to have that unless, if you keep crowding out, I don't mean you, if the government keeps crowding out the private sector. So reducing conforming loan limits is one way. The original charters of Fannie and Freddie have an excessive use provision. It was never meant to replace the entire market. It was meant to supplement the market, and it hasn't ever done that. It's always increased until it's dominated. That provision has never been defined, and it's never been enforced. So those would be two ways right off the top.
I appreciate that. And I was in private practice. I did a lot of closings, and just the conventional home market, mortgage market, as well as PMI. I mean, that really helped people with home ownership. FHA, I saw the problems with under certain issues that if you got an FHA loan, really costs a lot to a consumer. And PMI and home mortgage, they really do work with consumers, and I think help them get the best deal and help them not just buy a home but keep it. So I will say, I just want to make a quick statement in support of the low-income housing tax credit. Before I close out today, I'd like to raise one other solution that is outside of this committee's jurisdiction but would help address our nation's housing shortage: the affordable housing tax credit. Since President Reagan, the housing credit has been a successful public-private partnership that leverages the capital we need to develop more affordable homes for seniors, disabled veterans, and working people. The problem is, and nowhere is this more evident than Long Island, demand for affordable housing aggressively outstrips supply. That is why we need to expand this credit by enacting H.R. 3238, the Affordable Housing Credit Improvement Act, on a bipartisan basis. And I'd like to yield to the chairman of my remaining time.
I thank the gentleman. I'll point out this is our fourth hearing on housing. While that doesn't quite keep pace with 13, I'll note that 13 didn't fix the housing crisis. The gentlewoman from Colorado, Ms. Pedersen, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you all for your time and expertise. I really appreciate being here, having the opportunity to hear from all of you. I represent Colorado's 7th Congressional District. I am very lucky to have been born in Colorado. And what we've seen in the time that I've lived there, it's actually my birthday, so 42 years of living in Colorado. We have seen exponential increase in the value of homes. And when I even think back at when I bought my first house, housing has tripled in just a short amount of time. And it's really the perfect storm, and I know we've talked at length about this today, but when we think about the housing crisis in 2008 that took out many home builders, and we still haven't recovered from that. We also saw our economy expand with the investments to keep our economy afloat during the pandemic, which also, unfortunately, our supply chain was decimated, as well as with the increase, with our economy booming, with the workforce shortage across industries, has significantly impacted the housing market. One of the very easy ways that we could help address that issue is actually coming together on legal pathways for people to work here, and it's what I hear from the construction industry constantly. But this is something that really hits home for me. I think that far too often people in Congress haven't had the personal experiences that so many people are struggling with. And I grew up in a home where my dad lost his house and faced homelessness. My mom was one of the very lucky people who actually qualified for Section 8, which saved her life. I've seen also family members who were forced to live on the streets because there was lack of access to housing and substance use disorder treatment. And so when we talk about if we don't pay the upfront costs of actually investing in this, it comes on the back end tenfold to our local government, state, and federal dollars. And so I want to thank you for highlighting that, Ms. Yentl, and want to just bring it back to specific policy ideas since we have limited time. So the YIMBY Act, Ms. Royster, thank you for calling that out as an important first step forward on actually having our local and state governments look at their restrictive land use policies. But what, in addition to this, should we be doing? We talked about restricting their ability to actually have these policies at the local level, trying to bring some carrots to incentivize them to move in the right direction. What specific policies for all of you, what can we do at the federal level beyond just general ideas to help support these local investments?
So I'm glad to take the first response to that. Happy birthday, by the way. So we support the YIMBY Act. It's an important piece of legislation, and we think it should be enacted. We also think we can go further on requiring local communities to do more to remove restrictive local zoning, and we can do that by tying those requirements or incentives to federal dollars, and we should look outside of the housing dollars to big infrastructure dollars, the kind of dollars that more exclusive communities want to receive and would be more willing to make changes in order to do so. But also, we need to expand subsidies to make homes affordable to extremely low-income people. And we should do that through expanding rental assistance to make it universally available to all households in need. We should preserve and build more housing that's affordable to extremely low-income people through programs like the National Housing Trust Fund. We should continue highly effective programs like emergency rental assistance to prevent evictions, prevent homelessness, and we should put forward robust and then enforce tenant protections to keep people stably housed.
Thank you. I know we don't have a lot of time to get into this. Mr. Appleton, I wanted to ask you about what you all are doing to make sure that people know and that you're advertising access to loans without a 20% down payment. That's really restrictive. While people are actually saving to make that investment, they're once again far out of reach of being able to qualify.
Yeah, thank you for that. It would take the average household earning the national median income 35 years to save the down payment for the average national median priced house. So we are active in local communities with homebuyer education resources, spreading the word that you do not need 20% to become a homeowner right now.
Thank you. I yield back.
Until time's expired. The gentleman from New York, Mr. Lawler, is recognized for 5 minutes.
Thank you, Mr. Chairman. Apparently, my colleagues seem to think that the number of hearings we hold translates to actual legislation passing. In the last Congress, there were roughly 55 hearings on housing and housing affordability, and yet 0 bills were enacted into law under Build Back Better or the IRA that the former chair of this committee was pushing for. These bills so bad that even the Biden administration rejected them. And yet now we're dealing with a 20-year record high on mortgage interest rates. New York City has 50,000 vacant units, in part because of its draconian rent control laws and the laws passed by the state legislature that require these units to be brought up to code. Taxes go up, energy costs go up, and yet they're arbitrarily capped at what they can charge in rent. And so what happens? They choose to leave it vacant and take the tax write-off instead. Bang up job, good policies. These are really working out well. We have 6 million units underbuilt. Well, how do you meet the supply need when the cost of living is through the roof, the cost of doing business is through the roof, the cost of goods and cost of construction, and the cost of energy? All driven by horrifically bad policies when Democrats had complete control of Washington, complete control in Albany, complete control in New York City. And yet they're shocked that we have a housing crisis and that we have an affordability crisis. Maybe we should consider changing our policies. Maybe we should look at how to reduce the cost of living, reduce the cost of construction, reduce the cost of doing business. I don't know, maybe actually increase domestic production of energy. That might help. No. Why would we think about this logically? So when I hear my colleagues complain about the number of hearings, my God. Stop worrying about the number of hearings and start worrying about the actual damn laws that we're passing. That's a better idea. Housing affordability is a persistent challenge. With mortgage rates at multi-decade highs, limited supply, and continued supply chain and construction issues, for many, it is the most difficult time to purchase a home in a generation. The market is further complicated by the extraordinary circumstances of many homeowners unable to sell their home for fear of losing their low fixed-rate mortgages obtained prior to the rapid increase in interest rates. These, among other factors, have forced many potential homebuyers into the rental market, driving up rental demand and prices with it. In Rockland and Westchester counties, in my district, according to the National Association of Realtors, the monthly cost of a mortgage is $1,000 more today than it was last year. And in Putnam and Dutchess counties, it is at least $800 more per month. In both instances, these are additional housing costs of almost $10,000 or more a year. For many families, it is totally unsustainable. So this topic is critical, which is why last month I held a comprehensive roundtable discussion in my district on the housing issues that have significantly affected the local area, and which included a diverse group of stakeholders, elected officials, government agencies, nonprofit organizations, and key figures from the real estate industry, including developers and realtors. While there are some existing efforts that should be improved and expanded upon, such as the Affordable Housing Tax Credit, we need to be working to remove the governmental barriers that drag approvals out for years, drive up costs, and disincentivize the investment and participation our constituents need. It's been mentioned a number of times, the impact of regulation on the cost of housing and the incentivization of building and the flawed attempts of government to intervene on this topic. This has been at the forefront of New York in the last few years as we've seen a blend of heavy regulation with ham-fisted attempts by the governor to circumvent regulation with unrealistic, arbitrary mandates to build housing in areas that don't have the requisite situation to do so, including a lack of infrastructure. We have to look at this holistically, and we need to change course. These policies are not working. With that, I yield back.
Thank the gentleman. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you all so much for being here. We already know the average renter now pays over 30% of their income on rent. I know in Detroit metro area, in my communities, there are 3 extremely low-income renter households for each unit that is both available and affordable. So the housing crisis is real. That's something I guess we can all agree on. But what I find very, very questionable is the assertions motivating today's hearing. It strikes me odd to hear criticism of, quote, an outsized government presence distorting housing markets by supporting low-income families when the billions of dollars in benefits provided by mortgage interest deduction to wealthy households go unquestioned completely. Moreover, before government intervention, many of the foundational elements of our housing finance system, like secondary mortgage market, simply didn't exist. Ms. Yantel, when did the long-term fixed mortgage option become widespread? Who created it?
It was under the New Deal that we started to have longer-term mortgage rates
That's
of
right.
15 years and then increased steadily.
Yeah, that's right. The New Deal era reforms our typical mortgage had variable rates and came due in 3 to 5 years. Fixed rate long-term mortgages were virtually non-existent. This is just one of many examples demonstrating the limits of what we call private market solutions. Ms. Yantel, even if we eliminated all regulatory barriers today holding back our housing markets, would market rate housing be affordable for all families?
No, it wouldn't be affordable for extremely low-income households.
As you stated in your testimony, what federal subsidies are, quote, necessary to fill the gap between the lowest income people can afford to pay the cost of developing and operational rental homes. Why?
Because private operators can't build and operate housing on their own without subsidies and make those homes affordable for the lowest income people. We've heard today several Republicans talk about the importance of the low-income housing tax credit program, which is an important program that can be further improved to serve the lowest income people. But I believe that's a helpful recognition that federal subsidies and intervention is necessary to make homes affordable.
I believe government interventions are not without any shortcomings. I agree on that. But historically, our housing policies in particular have been undermined by racial exclusion and bias really towards working families in my community. And some federal policies, like the Fair Cloth Amendment, for instance, are an obstacle to build more affordable housing. We know this. But when Congress provides housing assistance to only 1 out of 4 eligible households while saddling public housing with $70 billion capital backlog, we must be honest with ourselves about where the problem lies. Another example of the limits of private market relates to providing small dollar mortgages. I talked to the Secretary of HUD about this. For a bank, the fixed costs are the same to originate a small loan, right, versus a big loan. This makes small loans less profitable. So, Ms. Yantel, what are policy levers available for federal government to increase support for small dollar mortgages? In my community, over 30% in some communities are small dollar, less than $100,000, but they're not getting access to these mortgages.
That's a question that I'd be glad to get back to you with further information about.
Are there federal subsidies, though, right now that can be provided for loan origination and servicing?
That's outside my area of expertise.
So I know millions of Americans right now, and families are struggling right now. But it's, access to small dollar mortgages. It's the fact that we have some of these amendments and policies in place that really cause these barriers. But what I don't like is that fact that we think the private market's gonna fix its own. And I've seen it, again, in my own community, when we see over and over again, banks and other institutions have policies within place that are geared towards one community over the other. I see it alone, where Michigan lost more Black home ownership than any other state in the country. And I really believe it's because of the weakened CRA. It's because we're not enforcing the Fair Housing Act like it should be. And this is where we come in as a committee to talk about those real obstacles. There's nothing wrong in saying, hey, we got to do better. You should literally talk about where you function in Wayne County. If over 50% of the housing market is less than $100,000 worth of the home is worth or put out for sale, then why aren't we saying to our banks, we'll help, let's get these loans out, let's get home ownership increase. Thank you so much, I yield.
Thank the gentlewoman. The gentleman from Nebraska, Mr. Flood, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and a happy birthday to our colleague from Colorado this morning. Housing affordability has become the #1 issue in Nebraska, and I'm pleased that we're focusing on the problems at hand in this committee. When we talk about housing affordability, we need to have a conversation that's really focused on what's driving the cause in my home state. Unlike my colleague from New York, lack of supply of housing in the marketplace. We can subsidize all the housing we want at the federal level, but regardless of how much money the federal government spends, if housing stock doesn't increase, the problem persists. If you want to make housing more affordable, you increase supply. If you want to make it more expensive, pour money into vouchers and subsidies. Before jumping into a conversation about zoning restrictions, I want to briefly mention manufactured housing. Manufactured housing has the potential to be an affordable alternative that lowers the cost of housing overall for single-family units, and I'm pleased to see that manufactured housing is part of the discussion today, and that there's some hope that there's legislation attached to the hearing on that topic. Now back to zoning. I'm the proud Republican lead on the Yes in My Backyard Act with Congressman Kilmer. This bill would require community development block grant recipients to report on the policies they use related to zoning restrictions. Once we have comprehensive and comparable metrics for zoning restrictions across different jurisdictions, it will be easier to identify the full impact these policies will have on housing costs. Our witnesses come from all different unique perspectives, and I'd enjoy hearing from some of them on this important bill. Mr. Royster, could you please explain how zoning restrictions can impede the development of rental housing?
Thank you, Congressman. I'll give you examples where barriers were lowered and it increased development in rental housing. So several states and localities in 2023 enacted YIMBY-related legislation to spur housing development. California has passed reforms to allow faith groups to build affordable housing on their property, and legislators in Montana passed a series of bills which would allow for backyard accessory dwelling units, or ADUs, and allowing apartments in commercial areas. And on the other coast, Vermont bundled zoning reform into a single sweeping bill, which will take effect next year, dropping lot sizes, legalizing duplexes, fourplexes, and limiting minimum parking requirements. So these are just a few states who have begun to recognize the important nexus between the discriminatory land use practices and undersupply of housing. As these and other land use reforms take effect, we will see an increase in housing supply.
Thank you, Ms. Royster. I appreciate that. Ms. Yentl, can you explain the National Low-Income Housing Coalition support for the Yes in My Backyard Act?
Yes, thank you. We do support the bill. It's an important way for communities to have more resources and increased incentives to address restrictive local zoning, which is a part of the puzzle that needs to be solved. So we're supportive of the YIMBY Act.
Thank you, Ms. Yentl. Dr. Hamilton, you included some examples of localities that cut land use regulations in your testimony. Can you walk through some of those examples for us? What were the resulting effects of those policy decisions?
What we see is that in places that reduce barriers to housing construction, the market responds by providing more housing and at more reasonable prices accessible to more households. Thank you for your attention on manufactured housing as one piece of getting the rules right to facilitate broadly accessible housing. Nebraska is one of the few states that requires its localities to allow manufactured housing to be sited anywhere that a site-built house would be allowed. And Congress could go further by removing the permanent steel chassis requirement on manufactured housing to make this type of housing more flexible and able to serve a wider variety of households.
Thank you very much. Mr. Michel, you also mentioned zoning restrictions in your testimony. Would you care to add your perspective on how government restrictions decrease housing supply? And you've only got really 30 seconds, I'm sorry.
I mean, I'm in agreement with Ms. Hamilton, or Dr. Hamilton, and I don't necessarily think that it's a particularly, or mainly a federal problem, but I mean, but they're real and they matter.
Right. You know, our witnesses today, I think to the chairman's credit, represent a wide range of players in the housing space. Let the record show that we have extensive support on the Yes in My Backyard Act from our witnesses today. I appreciate all of your testimony and your time, and with that, I yield back.
I thank the gentleman. The gentlewoman from Georgia, Ms. Williams, is now recognized for 5 minutes.
Thank you, Chairman Davidson, and thank you to all of our witnesses for joining us today for this very important conversation. Y'all, I represent Georgia's 5th Congressional District, centered in my home of Atlanta. It's no secret that my district has one of the largest racial wealth gaps in the country. Affordable housing lays the foundation for financial stability, economic mobility, and wealth building. Without it, the racial wealth gap will continue to grow. Over 2,000 Atlantans are experiencing homelessness due to the lack of affordable housing, while nearly half of Atlanta's renters are cost burdened. But despite these pressing challenges, Atlanta is short of more than 130,000 affordable housing units, 130,000. And some that we do have, they've been deemed uninhabitable. Last year, all of the residents of Forest Cove, an affordable housing complex in my district, were forced to relocate because of excessive mold, broken windows, burned buildings, and other issues that made the complex unlivable. And this is unacceptable, y'all. Affordable is not a synonym for poor, low quality, or unsanitary. Affordable means inexpensive and reasonably priced to meet people's budgets. To build their lives and have the opportunity to build wealth, my constituents need affordable housing that is also safe and comfortable, and yes, even desirable. Ms. Gentle, what can we expect to happen if Congress continues to kick the can down the road on this housing crisis, if Republicans are successful in slashing the federal housing budget, and if there's continued finger-pointing at states and local governments to do the work alone?
The housing crisis will worsen, and already by nearly all measures, the shortage of housing for the lowest income people and the lack of affordability is worse than it's been on record. And the issue that you raise about Forest Cove is very important, and it points to the fact that we not only need to be providing new subsidies for more families to have housing that's affordable to them, but we have to focus on preservation of existing affordable housing stock. And in the public housing capital needs are beyond $70 billion just to fix up the existing public housing infrastructure to make it safe and sanitary and habitable for the people who live there today and to preserve it for future generations. And because we so woefully underfund preservation of public housing and also project-based rental assistance and other types of affordable housing, we're losing 10,000 to 15,000 units a year of public housing to obsolescence or decay. So by not further investing in maintaining our critical affordable housing infrastructure, we're worsening the shortage of homes for the lowest income people.
Thank you, Ms. Gentle, and I'm glad that you, as well as one of my colleagues, brought up inventory, because inventory plays a crucial role in housing affordability. When complexes like Forest Cove are unlivable, it forces families to find more expensive places to live, uprooting lives and putting even more strain on our limited supply of affordable housing. If dwindling inventories of affordable housing weren't enough, too many families in my district and across the country are facing outside competition from massive investment firms. When they think they're ready to make the leap to buying a home, they're cut off at their ankles by investment firms. Families are being outbid by investment companies who are buying up single-family homes at astonishing rates. Just in Atlanta, large institutional investors own nearly 72,000 single-family properties, according to the Urban Institute. Yesterday, I co-led the introduction of Congressman Adam Smith's and hedge fund control of American Homes Act to put an end to this and make sure that families who have the means and ability to purchase a home are able to do so. Over a 10-year period, this important legislation would reduce the number of single-family homes owned by hedge funds, putting the power to purchase back in the hands of families so that they can start building equity and, more importantly, building their lives and helping to close the racial wealth gap. Ms. Gentle, how has the rapid entrance of hedge funds and other institutional investors into the single-family housing market impacted the ability of low and middle-income families to buy a home?
Well, in many of the ways that you raised, and I would add that it also creates challenges for the people who rent those single-family homes that are owned by institutional investors. And in general, institutional investors are among the worst actors in the housing field when it comes to landlord-tenant relations. And the research and the data show that those institutional
And Ms.
investors—
Gentle, unfortunately, I am out of time, and I have more questions that I will submit for answers for the record. Thank you, Mr. Chairman, and I yield back.
I thank the gentlewoman. The gentlewoman from Texas, Ms. De La Cruz, is now recognized for 5 minutes.
Thank you, Mr. Chairman, for holding this hearing today, and I thank our witnesses for appearing before us. This is an issue that is close to me, as I believe that South Texans, people in South Texas, Americans, understand the very real impact of rising housing costs. More and more Americans continue to see their housing expenses rise as their single most expensive monthly cost. Inflationary pressures have pushed interest rates up and added premiums unaffordable to some would-be homebuyers. And since the pandemic, Washington has only made this issue worse by pumping trillions of dollars of Democrat-sponsored spending into the economy. Mr. Appleton, as you know, there are several factors in the mortgage market simultaneously hindering an increase in the housing supply. Our current high interest rate environment both increases cost to borrowers and also de-incentivizes existing home sales from homeowners locked into lower rates. We now also see the potential for the Basel III proposal to dramatically increase capital requirements and in turn potentially increase the risk weighing of single-family mortgages. My question is this: can you elaborate on the negative impact that this would have on mortgage affordability and mortgage availability?
Thank you for your question, Congresswoman. If finalized, the proposed Basel III endgame would limit the ability for certain banks to provide access to credit for low down payment borrowers, including many first-time low and moderate income and minority borrowers. The rule should recognize the loss-absorbing benefits of private mortgage insurance in determining the loan-to-value ratio-based risk weights, but it doesn't. So restoring that recognition would encourage innovation in portfolio lending and level the playing field to ensure consumers have access to a broad array of low-down payment financing options across bank portfolio products, GSEs, and government agency executions.
Absolutely, and I'm going to have you repeat this. You said that the Basel III would have a significant impact on minorities. Is that correct?
So communities of color and minorities are less likely to have the intergenerational wealth to bring a large down payment to the closing table. And by Basel's risk weights and lack of recognition for private mortgage insurance, it's going to make it uneconomical and very difficult for banks to engage in that type of lending.
So where we have my colleagues on the other side of the aisle say that Basel III is actually going to help minorities, what I'm hearing from you is that it's actually going to hinder minorities in their dream of having their home. Is that correct?
Yeah, I think there's largely been alignment among consumer groups, mortgage market participants, and members of this committee on both sides of the aisle that Basel III is going to be negative for low down payment borrowers, including low and moderate income and minority borrowers.
So now that we are all in agreement that housing affordability is at historic lows, is now the right time for regulators to further restrict access to capital?
Absolutely not.
And Mr. Mitchell, along those same lines of government intervention impacting the housing market, we also saw that President Biden and congressional, my colleagues on the other side, pumped trillions of dollars into the economy these past few years. Of course, that led to inflationary pressure, and it continues to impact and is the reason why we're here right now. Given this high interest rate environment, would you say that, or I'm going to ask, what market-based recommendations do you have to bring down the cost of housing?
Well, again, I think this is largely a crowding out sort of problem, so I have several recommendations alluded to in the testimony that would start that path, but you've got roughly 90% or more of the market mortgage-backed security market dominated by the federal government. That's one way you have to start paring that back. So the excessive use provision is one thing that could be defined and enforced. Reducing FHA insurance to match VA insurance, that would be another.
Thank the gentlelady. The gentleman from California, Mr. Vargas, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. First of all, I'd like to thank you and the ranking member for the courtesy of allowing me to sit on this committee. I waived on for the day. Thank you very much.
Thanks for the interest.
And thank you. And I'd like to also associate myself with what our ranking member said about Mr. McHenry. I think he is a very honorable, very fair person, as I think you are too. And again, I appreciate the opportunity. All right. So according to the October 2023 Consumer Price Index, housing costs remain the key driver of inflation in our country. Since 2020, home prices have skyrocketed by 47%. As of 2023, the average renter is now rent burdened, paying significantly over 30% of their rent, as we've heard here today. And all of our constituents are feeling this. And I have to say that we all have our personal stories. The situation with myself was that my mom and dad worked themselves to the bone to make sure that they had a house. And that little house financed 9 undergraduate degrees, numerous advanced degrees, scores of law books, engineering books, finance books, social services books, and ultimately it really was the ability to take money out of that house and really the generosity of my parents that all of my brothers and sisters and I got a decent education. I went to Harvard, so it's not real great, but it's okay. But again, it was that house that gave that opportunity. It really was. And they worked hard for that. So I was a little intrigued with the provocative statements that you were making, Mr. Michel, saying that federal policy should not encourage home ownership. I don't want to take words out of your mouth, but I believe that's what you said. Would others agree to that? I mean, it seems to me that that's somewhat wrongheaded. I see someone's anxious to go to the, would you like to comment? I saw you going towards the microphone.
Sure. Look, I think that the Federal Reserve Survey of Consumer Finances has found that the average net worth of a homeowner is 40 times the average net worth of a renter. I think that we need to make sure we have consistent, coordinated, and clear housing finance policy to make sure that private capital is not crowded out of the market unnecessarily by government programs. But I think that home ownership, when done sustainably and responsibly, is an excellent mechanism for wealth building.
And I don't agree with everything you said, but I agree with a lot of what you said. I do think that the government should be involved for those that can't afford. I mean, the down payment is really what kills a lot of people. I mean, they can't afford it, and that's why I'm not against private mortgage insurance. I think I used it. You know, when I bought my first home, I don't think there's anything against that. Manufacturing housing, people have been in favor of that. I'm not against that. But I do think the federal government has to be involved because there are some people that make very low money. And by the way, for a lot of people, they won't be able to own a home because they don't make much money. And that's why I think the federal government has a responsibility. And having all these people on the streets, I mean, whether it's 0.001% or whatever it is, to see these just a huge amount of people on the street living, in a way that's disgraceful is awful. I mean, I travel significantly around the world, and you don't even see this in developing countries. I mean, it really is awful, and we have to do something about it. But I do think that the restrictive laws that we have on zoning are problematic, but I also understand a lot of people don't want to change the character of their neighborhood. I mean, I think that's why we have to encourage home ownership, but also in a way that the neighborhood will accept, and that means you have to tell people, stacking homes is okay, making the lots smaller is okay. All these things are important. And then subsidizing. For those that need subsidies, we should do that. I mean, who can disagree with, Mr. Michel, you disagree with that. And I know then I should give you some time to react to that. Go ahead, sir. I don't have much time, but I
Sure. Renting is often economical. I've rented all my adult life. I still do. I advise the colleague sitting behind me that she should rent and not buy a house. I don't think she's going to listen to me.
Well, then I'll reclaim my time. I think that's a bad idea. In 1976, I bought my first home, and I paid in 1993, and I paid $176,000. I just put it in the U.S. inflation calculator, and that home, if it followed inflation today, would be $373,000. A home just down the street from mine, exactly the same. Well, they're historical homes, but they're the same size. Sold for $1.85 million. So I would say that was a very good investment.
Yes, but that's not an affordable home at that point.
That's right. But
so they work against each other.
It's not an affordable home, but it is a house that certainly benefited myself and my family, as the house did that my parents bought that didn't increase significantly like this one did. That's why I think to argue against home ownership, the American dream, is provocative to say the least. But
that's the equivalent of saying that we should encourage high leverage investment.
No, but we should encourage home ownership. It is the American dream to come home to a house that you own.
But that's the way we've been doing it.
Okay, my time is up, but I thank you for the courtesy, sir.
Thank the gentleman, and the gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Davidson, and thanks to Ranking Member Cleaver for holding this hearing, and thank you to our witnesses for being here. I would also like to thank the subcommittee for the opportunity to wave on to today's hearing. The growing scarcity of affordable housing in this country for both homeowners and renters is a serious crisis. Helping to alleviate this crisis will require, as our hearing title suggests, knocking down government barriers that are standing in the way of helping to supply more affordable housing. One such government barrier, and Ms. Hamilton has already made reference to this, to more affordable housing, is HUD's outdated requirement that manufactured housing be built on a permanent chassis. A permanent chassis allows manufactured housing to be more easily transported. This is helpful if a manufactured home will be moved multiple times during its lifetime. However, as I think most people are aware, many manufactured homes are now built with the intention of being permanently placed in one location and thus do not need to be built with a permanent chassis. Eliminating the permanent chassis requirement for manufactured housing from the Federal Construction Code administered by HUD will help to potentially save thousands of dollars on new manufactured homes made without a permanent chassis. I am proud to have introduced a bipartisan bill, H.R. 5198, the expansion of attainable home ownership through Manufactured Housing Act of 2023, along with my colleague, Congressman Correa of California, that will eliminate this outdated requirement. I thank the subcommittee for attaching the bill to today's hearing and look forward to working with colleagues to advance this important piece of legislation. Ms. Hamilton, and I know you've already spoken to this today to some extent, the latest figures show America is short 3.9 million homes. This shortage is especially severe among starter homes for first-time home buyers. Meanwhile, the HUD code on manufactured homes could be built for 20 to 50% less than an equivalent site-built home. Can you expand on how the current statutorily required permanent steel chassis for every HUD code manufactured home prevents broader adoption of this cost-efficient building choice?
Thank you, Congressman. Yes, manufactured housing is the most cost-effective way to deliver a new unit of housing in the U.S. today. And that's in large part due to the HUD code's focus on affordability over other types of policy priorities. And the permanent steel chassis requirement, as you said, is intended for manufactured housing that will be moved from site to site, when that's often not the case, particularly in rural communities where manufactured housing is a very important source of relatively low-cost housing. Eliminating the steel chassis requirement could also open up new opportunities for manufactured housing to serve as accessory dwelling units, We're seeing many states and localities pursuing accessory dwelling unit reform as a relatively low-cost way to provide new housing. And eliminating that requirement means that different types and different sizes of units can be produced under the HUD code, creating a policy that can work hand in hand with state and local accessory dwelling unit reform.
Thank you, I appreciate that. As I see time winding down, I think anyone who's ever had the opportunity to tour or be present at one of the manufacturing facilities where manufactured housing is produced will understand what I'm trying to get at here, and that is, we all know there is a shortage today of skilled tradesmen in our country necessary for building a home. My wife and I are renovating a home on our farm that we hope to move into. It was supposed to be ready in August. Apparently forgot to tell the builder which year we wanted to be in August. So, but there's this shortage of trades. And so I'm wondering if you might just expand in the few seconds we have left here on how the adoption of manufactured and modular homes helps to fix this problem in rural America.
Thank you. That's right. A manufactured housing allows a unit of housing to be built in a different location than where it will be sited. So opening up opportunities for housing in California, for example, to be built in a lower cost place is a very positive outcome.
Thank you, and I yield back, Mr. Chairman.
I thank the gentleman. I'd like to thank our witnesses for their testimony today. Greatly appreciated and very helpful. Without objection, all members will have 5 legislative days within which to submit additional questions for witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able, and this hearing is now adjourned.